Thank you for joining us at xam.com for this Forex Preview video. We'll be looking at the Reserve Bank of New Zealand policy meeting coming up on Wednesday. And like the RBA, the RBNZ is expected to raise rates when it meets this week as inflation is still raging. I'm Cristina Marujos. Joining me today is our Senior Investment Analyst, Cristina Barcenido. Cristina, inflation is raging across the country and action by the RBNZ so far has been negligible. Therefore, the question is whether policymakers might opt for a higher 75 basis points rate hike this time.
Hi, Cristina. Indeed, inflation remains stubbornly high, even in New Zealand, where the central bank was the first to start the tightening phase exactly a year ago. So the Reserve Bank of New Zealand will not abandon its fight against inflation immediately, likely delivering more rate increases in the months ahead. So the question that comes up before every meeting is how big the next rate increase will be. The latest comments from the RBNZ chief admitted that although the tightening phase may continue, the tightening phase is already looking mature. So unless the central bank wants to surprise everyone and boost the Kiwi suddenly, that makes someone think that a 75 basis point rate hike is less likely this week, and the forecast for a 50 basis point rate hike are right. Investors are also pricing three similar 50 basis point rate increases by February 2023. And the truth is that the economy is still looking quite resilient to afford higher borrowing costs. The lift of travel restrictions boosted economic growth in the second quarter. The labor market is still very tight. In the latest business survey from the Westpac Banking Corporation has shown improvement in profit expectations and business activities. So that will probably keep the central bank on the hawkish side for now, though some area in the economy, like the housing market, are looking fragile. House prices have been in a downtrend lately, and there was also some stabilization in the previous household spending reading, which could deter, sharper rate increases of a 75 basis point, for example, this month, given the New Zealand's very high household debt to income level. So my expectations are that 75 basis points will probably not happen this week.
Cristina, now let's also look at the Kiwi, which has fallen victim to the overall risk sentiment lately. Therefore, can the RBNZ offer it any support this week?
The truth is that discussion around Kiwi's weakness has come under the spotlight after the Bank of Japan's intervention last week. But New Zealand is an export-dependent economy, and the weakening currency could keep its exports competitive in international markets as recession risks are waning. Besides, New Zealand has much lower foreign reserves, and the impact of intervention may not be big or efficient, like in the case of Japan, which has also seen its currency rising only temporary so far. Moreover, other currencies have been falling along the Kiwi as well recently, and still the Kiwi is much cheaper than other currencies. So the Kiwi's depreciation may not bother the RBNZ for now. However, if the central bank appears concerned about it, it can use a more hawkish language to support it. Strikingly, many economists are now pricing a higher rate hike peak for the RBNZ. Somewhere between 4.5% and 4.75% compared to the central bank's 4.10% terminal rate peak. So if policymakers want to boost the Kiwi, they can just upgrade their forecast for the year ahead, contradicting the latest comments from the RBNZ chief. Looking at Kiwi dollar, and given the narrow monetary divergence between the New Zealand and the US, as well as the small spread between the 10-year government US and New Zealand bond yields, I think that the central bank's guidance could be an important factor for the next phase of volatility in Kiwi dollar in the short term.
Cristina, thanks so much. And thank you for watching this Forex Preview here at xam.com.